What's up, everybody? This is Suncor, the Korean bro. Today is 2022, October 13, and let's look at today's article. Okay. Before we go over articles, I want to look at what happened today. Um, Today we have a CPI event um, opened at 8:30 Korea time. We also have initial jobless claims at 8:30, and crude oil inventories uh, also on my calendar. Mm. Let's see. I don't know much about detail yet, so I'm just gonna read what this refers to. Mm. CPI is like a standard point that you have to look at if you are like a long-term investor. Mm. Initial job claims, crude oil inventories, CPI mom. Mm. Let's read this one first. What is initial jobless claims? Initial jobless claims measures the number of individuals who filed for unemployment insurance, unemployment insurance for the first time during the past week. This is the earliest U.S. economic data, but the market impact varies from week to week. A higher than expected reading should be taken as negative, bearish for USD. A higher than expected reading, while a lower than expected reading should be taken as positive, bullish for USD. So let's see. If it's higher than expected reading, if it's higher than expected reading, if it's higher than expected reading, higher than expected reading should be taken as negative for USD. Number of individuals who filed for unemployment insurance for the first time during the past week. So which means more people um, filed for unemployment insurance, which is not so good. More unemployment means less economic development. So if it's higher than expected reading, means lower economic development. So in turn, uh, that's what it is. Initial jobless claim, like literally, it means jobless. Initial jobless for the first time. That's what it is. And let's go over to U.S. crude oil inventories. The Energy Information Administration crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by U.S. firms. Okay, the level of inventories influences the price of petroleum products, which can have an impact on inflation. If the increase in crude oil inventory is more than expected, it implies weaker demand and is bearish for crude prices. The same can be said if a decline in inventories is less than expected. Let's repeat this one more time because it's really important stuff. Crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by U.S. firms. U.S. firms, what's important is it's a crude oil held by U.S. firms. Okay, the level of inventories influences the price of petroleum products, which can have an impact on inflation. The level of inventories. If the increase in crude oil inventories is more than expected, implies weaker demand and is bearish for crude prices. Okay, increasing crude oil inventory is more than expected, implies weaker demand and it's bearish for crude prices. Because we got a lot. So it implies weaker demand. The same can be said if a decline in inventory is less than expected. Okay, if the decline in crude was less than expected, it implies a greater demand, and it's bullish for crude prices. Okay, let's summarize this. So it's a crude oil held by U.S. firms. So if a U.S. firm has less crude oil, it means stronger demand for crude oil. So United States will possibly try to import crude oil. What that means is higher prices, stronger demand, higher price. Get it? So if the increase in crude inventories is more expected, implies weaker demand. Weaker demand because we got a lot. We have a less demand. We still have a lot. We don't need to have more. So weaker demand is bearish for crude prices. So crude oil price goes down. Okay. The same can be said if a decline in inventory is less expected. So here we have once again, initial jobless claims is people who's jobless for the first time, and if it's actual is bigger than forecast, that means unemployment rate has gone up, which means lower economic development. And crude oil inventories, if we have a lot more crude oil inventories than forecasted, it means we have a lot of oil, so we wouldn't have stronger demand. That means the price of oil could go down. Okay, that's what it is. Lastly, we're gonna look at consumer price index. The consumer price index measures the change in the price of goods and services from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as positive for the USD. Higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative, bearish for USD. So, consumer price index, it's the way people act. I mean, there's like a change in the price of goods and services, the change in price of goods and services from the perspective of the consumer. So as I myself, I'm a consumer, so I will look at it and we'll look at the this and the change in the price of goods and services from the perspective of the consumer. Key way to measure change in purchasing trends, and inflation. Okay. If it's higher than expected, reading should be taken as positive. So positive for USD. Okay. Positive for USD. Okay, that's what it is about today's news. And let's go over to marketbeat.com first. Okay. Social Security payments set for big increases. What to know? Spain unveils €3 billion energy aid plan for households. Asian stocks fall ahead of U.S. inflation update. Heading up, S&P plunge could deepen if recession takes hold. Okay. Russia-Ukraine war is ongoing thingy. Germany's Merkel defends decision to get Russian natural gas. Walgreens beats fiscal quarter fourth forecast, absorbs UK business heat. Ikea calls 2022 an exceptional year despite challenges. O'Reilly and AutoZone outperformed the S&P. Is either a better stock? Stocks fall sharply as inflation data batters Wall Street. Three old stocks that are heating back up. Put PAP in your portfolio with low beta PepsiCo. Apple's price targets are changing. MJ shares lift higher on upbeat outlook for obesity treatment. Constellation brand stock may offer safety in the market storm. Institutional investors are buying these two stocks. Three old stocks are heating back up. Okay, let's read it carefully. Social Security payments set for being increased. What to know? Tens of millions of older Americans are about to get what may be the biggest raise of their lifetimes. Social Security payments? Okay. On Thursday, the U.S. government is set to announce how big a percentage increase Social Security beneficiaries will see in monthly payments this upcoming year. It's virtually certain to be the largest in 4 decades. It's all part of an annual ritual where Washington adjusts Social Security benefits to keep up with inflation, or at least with one narrow measure of it. So, along with high inflation, they're adjusting Social Security benefits to keep up with it. Okay. Plenty of controversy accompanies the move, known as a kosher living adjustment or COLA. Critics say the data the government uses to set the increase doesn't reflect what older Americans are actually spending, and thus the inflation they're actually feeling. So it's highly criticized because people say it's not really perfectly analyzed. The increase is also one size fits all, which means beneficiaries get the same raise regardless of where they live or how big a nest egg they may have. One size fits all. So that's what there's a problem. So one size fits all means no matter how much money you have or no matter where you live, the price the money that you get is all the same, right? Which means beneficiaries get the same raise regardless of where they live or how big a nest egg they may have. Here's a look at what's happening. What's the big deal? The US government is about to announce an increase to how much the more than 65 million Social Security beneficiaries will get every month. Some estimates say the boost may be as big as 9%. Wow, 9%, big increase indeed. Okay, Spain unveils 3 billion euro energy aid plan for the households. Spanish socialists promised Pedro Sanchez on Thursday announced a 3 billion euro package in new subsidies to help people weather high gas and electricity prices exacerbated by Russia's invasion of Ukraine. Wow. So, okay, there are a lot of countries in Europe, and Spain has officially announced that they're going to aid households. Um, so, in a way that they overcome difficulties with gas and electricity. There's a conflict between Russia and Ukraine, so it's hard for some of countries to get enough natural sources. And he has said that he wants to help them, right? announced a €3 billion package in new subsidies to help people weather high gas and electricity prices exacerbated by Russian invasion of Ukraine. The measure includes set gas price rates for collective residential heating system until the end of 2023 and more electricity and heating subsidies for low-income households. Announcing the measures in Parliament, Sanchez said they would benefit 40% of households. Asian stock fall ahead of U.S. inflation update. European stocks and Wall Street futures gained Thursday while Asian markets fell ahead of U.S. inflation data that investors worry will reinforce Federal Reserve plans for more aggressive interest rate hikes. London and Frankfurt advanced as Shanghai, Tokyo, and Hong Kong declined. Oil prices advanced. Wall Street's benchmark S&P 500 ended lower Wednesday after inflation in producer prices edged down, but still was near a multi-decade high. So, stock fall ahead of U.S. inflation update. Okay, I get it. Fall ahead of U.S. inflation update. Okay. Had an S&P plunge could deepen if a recession takes hold. If the economy really is headed for a recession, the stock market may have still more to drop. The S&P 500 came into this week having already plunged roughly 24% from its record high earlier this year, but history shows the average U.S. recession since 1947 has brought an even bigger fall for stocks. The average U.S. recession since 1947 has brought even bigger fall. So currently we had 24% and 6 more percent to drop because the average of U.S. recession since 1947 has brought even bigger. So roughly 30%, so 6% more to go. Recently, the pain has been even worse than that. The last 3 recessions have seen the main measure of the U.S. stock market lose between 34% and 57%. How stocks behave around recession isn't an academic question. With the Federal Reserve hiking interest rates sharply in hopes of getting inflation under control, see, we have inflation. And what the Federal Reserve is trying to do is hike interest rates sharply to have inflation under control. More economists are warning of a possible downturn. So a lot of experts and economists are worried about stronger recession. So the average of U.S. recession was 24%, and the recent 3 recession, the average of recent 3 recession is like 37. Is it 34%? So this recession takes hold. The housing industry has already been hit hard by the leaping mortgage rates that have resulted from the Fed's moves. Sales of new home sales in the summer to their weakest level in more than 6 years. Growth has slowed elsewhere in the economy too, while manufacturing is expanding at its weakest pace since the 2020 recession. So I have to take a conservative stance. I was going to invest some money into it, but then we still have interest rate hike scheduled November and December, and as far as I know, we'll have 2 consecutive upward interest rate hike. So after that, I'll be looking at CPI and then spend some money into it right away. Germany's Merkel defends decision to get Russian natural gas. Okay, let's see. Defends decision to get Russian natural gas. Former German Chancellor Angela Merkel on Thursday defended her government's decisions to buy large quantities of natural gas from Russia, which was her country's primary gas supplier when she left office. Speaking in Lisbon, Merkel said that you always act in the time you're in, and that she doesn't regret her decisions. She said that it was clear that Germany needed to diversify its energy supplies as they moved away from nuclear and coal-fueled power generation. That gas would be needed during that transitional period. Merkel said that from the perspective of that time, it was very rational and understandable to get pipeline gas, including from Russia, that was cheaper than LNG from other parts of the world. She added that even in the Cold War, Russia was a reliable energy supplier. During her time in Powell, the Nord Stream 1 pipeline bringing gas directly from Russia to Germany under the Baltic Sea came on stream. The government also backed the parallel Nord Stream 2 pipeline despite strong opposition from Central and Eastern European countries and the United States. It never entered service because current. Hmm. So Merkel's well when she was doing her job, it was the right decision to get natural gas from Russia because Russia back then was reliable supplier. But now that Russia has invaded Ukraine, there's like conflict ongoing. There's like conflict going on, so that it's like turning points. She strongly says that resources has to be diversified. Um, Russia back then was like the main supplier. So now that Russia um, is like an evil from like a lot of people's point of view, it's hard to get Russia directly. It's hard to get sources only from Russia, right? Well, we've got to come up with like variety of ways, various ways to get sources. Mm. It's what she says, Raquel. Ikea calls 2022 an exceptional year despite challenges. A Swedish home furnishing giant Ikea said Thursday, despite unprecedented challenges caused by the war in Ukraine, supply chain disruptions, increased inflation, and lingering fallout from the COVID-19 pandemic, 2022 had been an exceptional year. The world's biggest furniture brand reported the retail sales of 39.5 billion euros this financial year, which ran from September 1st, 2021 to August 31st. There was a 5.6% increase from the previous year's sales of 37.4 billion euros. However, inflation and supply chain issues led to rising costs and higher prices, meaning sales quantities were down, though they cost more and there were struggles to keep shelves full. Online sales down 10% lower from fiscal 2021. We lived up to the challenge, achieving solid performance in a disrupted environment, making tough decisions while always keeping sight of the needs and dreams of the many. So, the point of this article is that despite the challenges that they faced, like supply disruptions, and Corona, um, the sales this year is larger than the previous year. Uh, Despite challenges uh, they dealt with it pretty well, and it's gonna happen over again. And they're like confident with the job that they're doing, from what I guess. O'Reilly and the AutoZone outperformed the S&P is either a better stock. Auto parts Retailer O'Reilly may be forming a constructive cup with high handle pattern. Analysts expect the company to earn $31.82 per share this year. Okay. Stocks for sharply inflation data batters Wall Street. Okay, let's see. A spirits crushing report on inflation is battering Wall Street Thursday, and stocks are buckling toward their weakest levels in almost 2 years. Hmm. The S&P 500 was 2.2% lower in early trading after worse expected data showed inflation is not slowing. Inflation is not slowing. Inflation is not slowing, and Federal Reserve is using interest rate hike to have this under control. So the interest rate will be raised once again, not once again, like two more times. Um, that's forcing investors to brace for continued big hikes to interest rates by the Federal Reserve to get inflation under control and the potential recession those moves could create. Okay. Potential recession again. I know that Amazon is doing pretty well, especially in this recession. What is it about Suncor? Suncor continues to see strong results as higher oil prices result in improved cash flow for the Montreal-based integrated oil company. Cash flow from operating activities doubled during the latest quarter, and with oil prices heading back up again, institutional investors are closely looking at the stock. After facing years of tepid results, the sudden increase in profit has pushed the valuation down significantly, with the latest price to earnings coming in at 6 times. Considering there's an increasing shortage of oil, primarily due to OPEC cutting down on production, prices could be heading back above $100 per barrel. Hmm. Let's find some articles from Yahoo Finance this time. Stocks plunge after inflation data comes in hot again. Okay, core U.S. inflation rises to 40-year high. Okay, mortgage rates reach 20-year high, closing on 7%. Market bottom is in sight. Oppenheimer likes these two stocks for a comeback rally. Okay. Many stocks are already reflecting recession. Morgan Stanley says it's time to buy these two beaten down names. Horrible CPI has some bracing for jumbo hike. Wall Street reacts. Okay. Why JP Morgan believes these three stocks are attractive in the current market. Okay. Desperate to outrun inflation, people are making big changes to their habits. You can too. Hmm. What diamonds AZ CPI inflation report stocks down hard. Treasury yield surge above 4%. Hmm. Three stocks are holding up through the storm. Applied Materials cuts its outlook, blaming U.S. chips restrictions on China. Hmm. Okay, let's see. First one is about a stock sink as the inflation report comes in hotter than expected. U.S. stocks fell Thursday after inflation data showed that consumer prices climbed more than expected. What does that mean? Consumer prices climbed more than expected. More than expected. More than expected. The S&P 500 fell more than 2% in early trading, while the Dow Jones Industrial Average slumped 1.7%. The technology-heavy knowledge company was down nearly 3%. Okay. Closely watched measure of U.S. consumer prices rose by more than forecast to a 40-year high in September, okay, pressuring the Federal Reserve to raise interest rates even more aggressively to stamp out persistent inflation. So wait, actual is bigger than forecasted, which means people feel that it's okay. Um, the world where we live in is just okay. It's livable. Isn't it? Isn't what it says. So Federal Reserve thinks that that okay. Why don't we just go with raising interest rates even more? So higher interest rates means uh, less investment for companies. Less investment for companies means economic downturn. Okay. The core consumer price index, which excludes food and energy, increased 6.6% from a year ago, the highest level since 1982. The advance was broad-based. Shelter, food, and medical care indexes were the largest of many contributors, the report said. There are signs that the market bottom is in sight. Oppenheimer likes these two stocks for a comeback rally. Okay, what is it? Corebridge Financial Services Company, and we have Point by Farm Global. Radio Pharmaceutical Drug Development and Evaluation. Valero Energy Corporation, Occidental Petroleum Corporation, a lot of expert and so-called legend, they're trading energy companies a lot. Companies that are known as selling oil and natural resources. Okay, this is something different. There are many stocks that are already reflecting recession. Morgan Stanley said it's time to buy these two beaten down names. Okay, what is it? Smartsheet? Ford. Okay. Those hoping for the fourth quarter to herald the stock market comeback have been disappointed so far. Yes, so disappointed. A late year rally has yet to properly materialize, with the market still factoring further turmoil as the fight against inflation continues and the specter of recession remains. However, while the prospect of recession looms, Morgan Stanley's investment management managing director Andrew Simon points out that many stocks already appear to be taking for granted the likelihood of recession. There are so many stocks down, they're already reflecting a recession. So what we have at this point is Smartsheet, company name Smartsheet Inc. Okay, let's see. It's already on my portfolio. Okay, let's read this carefully. With many companies offering software services, they're bringing about a more convenient working environment. One such name catering to these needs is Smartsheet. The company is a leader in the competitive project portfolio management software segment. The company offers a platform which is used for assigning tasks, following a project's progress, managing calendars, and the sharing of documents with the product's ease of use making for more effective workflow management. Okay. Managing calendars and the sharing of documents, following a project's progress, managing calendars, and the sharing of documents with the product's ease of use making for more effective workflow management. A glance at the growing revenue indicates that companies using the service agree. Sales have been steadily increasing over the past couple of years, a trend which continued in the financial results for the second fiscal quarter. Revenue increased by 41% year over year to $186 million, beating the consensus estimates by $6 million. The company posted a beat on the bottom line too, with ADJ EPS of $0.10 faring much better than the minus $0.20 anticipated by the analyst. Is high quality asset in the collaboration software space with the most robust enterprise features and the broad set portfolio equipped to handle the widest array of use cases compared to workplace collaboration peers. We see Smartsheet going after a large $21 billion total addressable market as its platform addresses a growing number of use cases with 100K customers of all sizes. Smartsheet has seen viral adoption with its customer base, as highlighted by a best-in-class 120% net retention rate. Given the company's low market penetration and strong competitive moats, we see sustainable 20% revenue CAGR over the next 10 years. Okay, Smartsheet. Another horrible CPI. See, I read an article a couple of minutes ago about CPI, and CPI actual data is larger than forecasted. Mm. So, the Federal Reserve could possibly make a decision on raising interest rates again. Mm. Wall Street hopes the Federal Reserve might be able to ease up on its battle against inflation later this year, or decisively dash Thursday. When consumer price index data for September came in unexpectedly hot. Core CPI, which excludes food and energy, increased 6.6% from a year ago, the highest level since 1982. Stock futures on the S&P 500 sank below 2% after rising as much as 1.3%, and 10-year Treasury yield jumped above 4%. Horrible CPI number, said Andrew Brenner, the head of international fixed income. He wondered what the Fed might have to do on interest rates. Will they go 100 basis? Here's what other analysts were saying. There can't be anyone left in the market who believes the Fed can raise rates by anything less than 75 BPS in November meeting. If this kind of upside surprise is repeated next month, we could be facing a fifth consecutive 0.75% hike in December, with policy rates blowing through the Fed's peak rate forecast before this year is over. There's a lot of saying about this CPI. Okay. Oh, DocuStock. There's an article about DocuStock. DocuSign has had a terrible year. A former bear says the worst is over. Rough year for DocuSign, yes. The e-signature software services company saw business soar during the pandemic as office workers stayed at home and shift to digital documentation soared. But growth has moderated in recent quarters. There has been considerable turnover in DocuSign sales team, and there has been a CEO change. Yeah, that's right. Turnover in DocuSign. A few weeks ago, the company announced a 9% staff reduction. All of that has weighed heavily on stock, which is down about 70% for the year. Hmm. Okay, it's too late. This is it for today. Here in Korea. It's already past 12 at night, so I'll see you guys tomorrow or the day after tomorrow. Okay, bye bye.